Are you missing out on maximizing your investor returns by overlooking the importance of rent growth in the multifamily sector? Welcome to Strategy Saturday. I'm Charles Carillo, and today we're going to be discussing why is rent growth crucial to multifamily investor returns. So years back, I had a property manager of mine tell me that you need to raise rents every year, even if it's only 1% or 2%. And I didn't think too much of it at the time. I was pretty naive in my 20s, and my thoughts around rent increases were pretty much if my insurance goes up by $250 that year, and I increase one tenant's rent from $1,000 to $1,020 a month, that will pretty much cover it, which is true. But then many years later, I realized the real reason behind that piece of advice, which is a significant increase in property values. So you might have heard index and mutual fund investors discuss expense ratios with different funds and their importance to your lifetime return. For example, if you invest $10,000 in two different funds, one with a 0.5% expense ratio and one with a 2.5% expense ratio, and both earn a consistent 10% annual return before fees, after 20 years, the one with a 0.5% expense ratio will be worth $64,000, while the one with a 2.5% expense ratio will be worth $51,000. In other words, the lower expense ratio fund will be worth 24% more. Now, this compound effect is also the basis for the annual rent increase strategy. Annual rent increases or lower fees in the fund example over a long period of time create dramatically higher returns. Now, this rent increase strategy is heightened when we evaluate larger apartment complexes, and this is mainly because commercial multifamily properties, so apartment complexes with 5 or more units, are valued by their net operating income, and we can exponentially increase the property's value for every dollar we increase the net operating income by. So for a simple real estate example, if you own an apartment building with 20 apartments rented at $1,000 per month, everything is identical except for the annual rent increase, and I'm assuming a 5% cap rate for this property. An example, if you increase rents by 1% a year, after 5 years, your property will be worth $240,000 more than it was at the beginning of year one. But if you increase rents by 2% a year, after 5 years, it'll be worth $500,000 more than the beginning of year one. Now, this is a greatly simplified example, and different rent increases may affect property expenses differently, which I've left out. However, it shows how important rent increases are to the property's overall valuation. So why is this important? Well, number one, if you currently own rental properties, you should raise rents yearly, even if it is a minimal increase. It is much easier to raise rents by a couple percent a year than by 10% every 3 to 4 years. And it's also easier for your tenants. Number two, when you're underwriting properties, be careful what you estimate as your annual rent increase assumptions. And number three, when you're reviewing another investor's underwriting, especially if you're deciding whether to invest, review their assumptions in depth. A 1% difference between proposed and actual rents can greatly impact the property's value over a 5 to 7 year hold. So I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at syndicationsuperstars.com. That is syndicationsuperstars.com. Look forward to 2 more episodes next week. See you then. Have you always wanted to invest in real estate but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.